Hello and welcome to this week's edition of the Property Buyer and Sellers Podcast. I hope you're well. It's Friday, the 9th of August 2024. And as usual, we're talking all things property. I hope you're well. Now, we're going to start off looking at the annual house price index just to show you where we are roughly. And the big news is it's pretty much flat, to be honest. Annual house price growth has picked up at the fastest rate since December 22, according to an index. But then when you read on, UK house prices rose 0.3% month on month in July. This is from the Nationwide. And that means that the rate of house price growth went from 1.5% in June to 2.1% in July. And that is the fastest pace since December 2022. So it's good news. The average price across the UK in July was 266,334. Robert Gardner, and that's the Nationwide's chief economist, said prices are still running about 2.8% below all-time highs recorded in the summer of 2022. And housing market activity has been on hold relatively steady in recent years. And the number of mortgage approvals for house purchases are at around 60,000 per month. And if you look at the index, you can see that it's definitely showing a little bit more optimism. And that's understandable because remember, we have had, albeit a small, but an interest rate reduction of 0.25 of 1 percentage point or 25 basis points, as the Bank of England call it. So we've seen for the first time a downward trend, and that has brought back confidence for sure. Although hasn't done that much for mortgage rates. Why? Because as we've mentioned many times, swap rates are what mortgage rates rely on, and those swap rates change all the time. I think we will start to see those fall off, especially if we see another drop at the next MPC meeting. Now, as far as house prices are concerned, we suspect this year will pick up, but we're not talking about massive rises. It's going to be relatively flat because still the affordability is a bit of a struggle with house prices where they are and interest rates where they are, certainly here in London. There will be pockets of house price growth, there always is. And one of the trends of recent years has been the migration of people outside of London, which has always been the opposite. It used to be what we'd say is you drop a stone in London and then house prices would ripple out. In central London, that is, they'd ripple out. And then after the pandemic, you might as well have dropped that stone in the sea and prices would ripple in, because actually the first places to rise were all the coastal resorts where people all of a sudden could work from home and decide, hey, I can change my life here. I can live somewhere beautiful, telecommute. And then, of course, at the end of the pandemic, people started to move back into the cities and we started to see more of a pickup here. Now, moving on, our next headline is all about the 10 cheapest and most expensive seaside locations. Now, I mention this because many of you I know, especially at this time of year when you're on your sunny summer holidays, will be away and thinking, oh, this is the life. Just think we could live here. Could we? Would we? And so Rightmove have done a list of the cheapest and most expensive seaside locations, and I'll just run you through what they've discovered. They say after something of a washout summer, many of us have been treated to the arrival of some warmer weather, which has naturally had us dreaming of heading to the coast to cool off. Now, the most expensive areas, starting at the bottom, Sandgate in Kent comes in at number 10, and you can buy a house there on average for 495,000. And then at number 9, we have Sidmouth in Devon, and they're just over 500,000 at 501,000. And then it goes to Lyme Regis in the beautiful Dorset at 521,000. Budley, Salterton in Devon comes in at 542,000. And then Barton-on-Sea in Hampshire at 562,000. Number 5 is Lymington in Hampshire at 603,000. And then it jumps quite considerably. You start getting into the posh bits now. Padstow in Cornwall, that must be very posh because that comes in at £678,000 on average. And then we go over to Milford-on-Sea in Hampshire, which is over £750,000. The average price there is £751,000, so not a cheap place to live. And then in second and first place, actually are neighbouring areas. First of all, we've got Canford Cliffs in Dorset, where the average price is 1.2 million, going to Sandbanks in Dorset, where the average price is 1.5 million. So if you're up there in the elite, you can join Harry Redknapp and end up in Sandbanks in Dorset. You probably guessed that already, because it's a very famous place for the wealthy to retreat to. And then on the cheapest places to live seaside wise, County Durham, Hartlepool. You can find a place there for an average asking price of 146,000. So if you fancy the sea life and you're in London, you can cash in and buy yourself a place in Hartlepool for 146,000 pounds. And then Workington in Cambria, 141,000 pounds. Maryport in Cumbria at 140,000 pounds. And then Girvan in Ayrshire at 139,000 pounds. It gets even cheaper if you're going to Grimsby in Lincolnshire, 135,000, and then Merseyside, Bootle, 133,000, and then above that, and even cheaper, is Ashington in Northumberland. Peterlee in County Durham you can find for 124,000. Easington in County Durham at 122,000, and cheapest of all seaside areas, Saltcoats in Ayrshire, where the average price is 114,000. So if you're thinking of that seaside retreat, there's some ideas for you. Rightmove has them all, and always worth checking out what they've got, having a little browse around. We do find many people at this time of year do go on holiday and decide that it's their time, they're going to retire. And many people, of course, are retiring early, cashing in. And, there's a big trend now, you may know, for die with nothing. Get rid of all your assets, pass them on to your children. Perhaps look at lifetime mortgages. This is not financial advice. Seek advice from an IFA if that's something you're considering doing. But certainly there are a lot of people at this time of year we find that are out there. They find their dream home in some coastal area. And it's funny because in London we find that property prices certainly don't rise in August because there isn't the number of bodies around to really look at properties. Everyone's away, and when they're not away, they're at home with their children, rightly enjoying them and going away for days out and things, perhaps various clubs. Certainly we find the housing market quietens down in London in August, but it comes back very strong for what we call the mums market in September, where everybody's back at work and, mums had enough of the kids, where they've come in, the bikes are a bit bigger, the kids are a bit bigger. And when it rained, they all came into the house and we're all squashed in thinking, not another year like this. And then they start the hunt. That happens in September. The mums market in September, as we call it, a very small window. So you should be preparing now and getting your agents around now if you're thinking of selling in September, so that you can be prepared, have the photographs done while the sun's out, get it all ready and push the button early September, because the window is a very finite one. It starts at the beginning of September. By mid-October, it's getting cold, miserable, dark. People start to give up. And when they start to give up, of course, there are less buyers around, and that can affect prices. And also, more importantly, it's not just about the price you sell for, is it? Because for most of us, we're also looking for a home to buy. And by mid-October, people are starting to withdraw, decide against moving, think about moving in the following year. Because, of course, by mid-October, the feasibility of moving this side of Christmas or this side of the year is much smaller, with the average transaction time being 16 to 20 weeks or 3 or 4 months at least. It's crazy. So, and these days solicitors seem to be slower. There are ways of speeding it up, but we'll come on to that with another edition, no doubt. We'll get a solicitor on to guest and tell us how things can speed up. Well, if you've been listening closely, you'll have heard last week where we had a wonderful guest on, and that was Judy Cunliffe, and she was telling us all about auctions and how the sellers pack can help in that regard. Now, the sellers pack is something that we would love to see. There's another solution which has come up recently, which is being done by one of the major portals. And what they're basically doing is initiating the searches. These are the local authority searches that can hold things up. And they're initiating them from day one of being instructed on a case, rather than waiting for the anti-money laundering to come through from their clients and so on and so forth. They're kicking off the searches at a very early point, straight away, in fact. And that means those searches will not be a hold-up in the majority of cases, or the hold-up at the end. Because in order to get that transaction across the line, we need the searches back, the inquiries from the contract back, and of course, most importantly for most of us, the mortgage offer. And that can take time while lenders query various things, and underwriters who decide whether or not you're a suitable risk for the loan scrutinize your whole lifestyle and make sure that you can afford things even after their stress tests and your credit scoring, of course. So in terms of going forward, we expect to see, we're already seeing, in fact, a number of our clients coming back from their holidays, having seen their dream home, made an offer on it, and in a desperate hurry then to get theirs on the market, to get under offer so that they can secure that property the other end. Of course, it's not the ideal thing to do But when impulse hits you and you decide your life is somewhere else, it's hard not to go in there and make the offer. The most advised thing to do in our experience is, number one, look in the area. And if you find that you're on holiday and you love it and you want to live there, yes, have a look around while you're down there or up there, wherever it is. Then once you've decided on the area, do your research, but don't look any further. Get your house on the market, get under offer. Why? Because you want to be in the best negotiating position possible when you make an offer the other end. And your negotiating position is very weak if you have to sell yours in order to buy the house the other end. And it's unlikely that an agent will withdraw the property in your dream area from the market until your house is under offer and there's a completed chain beneath. Why? Well, because in this day and age, as we've discussed here at the Property Buyer and Sellers podcast many times, many agents value unrealistically to try and sign clients up. It's quite typical for some of the larger chains to say to sellers, your house is worth 50, 100, or even 150,000 more than they know it's worth in order to get a signature on that contract and then sign you up for 4 to even 6 months in some cases, meaning that you're tied to that agent. And they're charging you a high fee because they're getting you this price that's much higher than other agents are suggesting you will achieve, when in reality, prices are like water. If you've got a good agent, the price will find its own level. If you ask offers over or you go high and try and come down, the price will eventually find its own level. But here's the problem. If you quote too high a figure, as many will, because they've been misled by the agent, quoting the high fee and asking for the high contract, what happens is nothing at all. And when nothing at all happens, the house the other end that you're trying to get to will sell to somebody else that's in a position to buy it. And you, unfortunately, will miss it. And that can be really hard and tough. And, you know, buying houses is about money, but it's also emotive. It's about the emotion, isn't it? Once you envisage your family in that house, maybe having a barbecue in that garden or a more relaxed lifestyle somewhere else, is very hard then to lose it and lose that dream in your mind. Emotionally, it's extremely hard. The way to do it, we always say, is deconnect. That means to detach oneself emotionally from the transaction. Easier said than done, though. Most people can't do it. And if you can detach yourself from the transaction and say, hang on, look at it like a business. How can I get the best deal for the one I'm selling? And how can I get the best deal for the one I'm buying? So if you want that coastal retreat or wherever else you're moving to, the key is to be in the strongest negotiating position. And let me tell you, if you found a house to go to and you're desperate to get there and somebody makes an offer on your house, you're probably likely to accept a lower offer from them than you would if you weren't pressed or pressured by the decision you've made the other end. If you have no pressure, i.e. yours is on the market, but you have not yet found, then you can thoroughly test the market and make sure that you get the best price without the pressure of worrying about the purchase the other end. Then when you get an offer, I know a lot of people ask this question, a lot of people are worried, yeah, but what does that mean? We go the other end and then we haven't sold, but we, what if we don't find? Very common question. And the truth is, we all have to start somewhere. And in the case of the UK market, most buyers anticipate and expect that most sellers will have to then go out and find. The important thing is clarity and transparency. You need to say to the agent and you need to say to the buyer, or the agent should be saying to the buyer, look, cards on the table. When you get to the point where the offer is accepted, then at that point, you should say, cards on the table. Are we clear that our client has to go and find now? And you need to wait while they try and do that. And most buyers will accept that position. And if they don't and say, no, I'm sorry, I've got to be in within a month, then you just say, well, this is probably not the house for you. As much as we'll try and find something else, it's probably not the house for you. Because in most cases, most buyers will wait because they recognize that the vast majority of the market here in the UK do not have a second home sitting waiting for them in order that they can just vacate so that you can move in. And this is a frustration of the UK market. Of course, chains can fall through, but it's also a case of, well, you could look for one that's chain free if you're a buyer. My advice would be consider all options, because often chains do go through, they do work out. And if you just restrict yourself to vacant possession properties, then you're missing at least 3/4 of the market in general. And you don't want to do that. You want to make sure that you get the best possible deal. And that means comparing everything that's available, whether people are able to vacate or not. So our advice is, number one, make sure that you know an area that you like and that it's affordable to you. Number two, at the point where you've established that, get yours on the market. Number three, timing. The market is good, but it's not fly away. Some agents will tell you the market's so fantastic and overvalue your house, and here we go again. Whereas that's not true. get it on a competitive price, because the market's still quite price sensitive, certainly here in London. Although I'm talking about the outskirts of London here, I understand that inner London is picking up, and that's great news. We tend to find that it does filter out, as mentioned earlier. So hopefully that sort of wave will hit us. And if it does, I anticipate that will happen in September. So we're looking forward to seeing what the September market has to offer. Of course, as always here on the Property Buyer and Sellers podcast, we'll keep you advised as to market trends. But right now, what we're finding is the more central agencies are seeing a bigger pickup than the more out of London agencies. And this tends to be good news. We should see a filter out. I don't think it'll be vast, but the pickup will be there, and it will be strong enough to get people moved if they're sensible and realistic on their pricing. And this is the key thing. You must be sensible and realistic on your pricing. If you look at the price of your house, make sure that you decathect, look on Rightmove and Zoopla, and look at what your competition will be. How does your house compare with the others that are available? And then look on nethouseprices.com, dial in your postcode, see what's sold on your road. What's sold is what's real, tangible, touchable, and try and find something recent, because the problem with it is a lagging indicator. And if you've got houses that were sold a couple of years ago, it may not be as relevant as ones that sold last week. So try and get a handle on what's selling and where it's selling. I mentioned before a little tool that you may have heard of called Property File. Well worth if you use the Chrome browser on your PC. Get Property File and download it to your PC. And what that will allow you to do when you go onto Rightmove is it will allow you to see the price reductions. When a house came to market, yes, you can see that anyway. But more importantly, how much it was reduced by and when it was reduced and how often it's been reduced. And these can be leading indicators to tell you how to pitch your house price. If a house has been on the market for 6 months and it's coming down and down in price, but is still available, then it shows that the price may not yet have reached its optimum level. If you see it came down and down and then it's under offer, then that gives you a much more realistic answer to the question of where your house price might be. So once you've sold and you go out and look, how do you look? Well, the first thing to say is you look in the area that is your preference. And if you can't find what you want where you want, you've always got two choices. Lower your sights, maybe a bedroom less, maybe not detached, maybe a semi-detached, or more money, not an option for most of us, I know, but you might consider cashing some other investments in order to invest in the property of your dreams. Or thirdly, of course, other areas. You might find that areas around the specific area that you like are that little bit cheaper. So if you target the area that you really like, and by the way to target the area you really like is find a street you really like in the area you want to live, and then guess a door number, number 10, Pool Road, for instance, and then Google that, number 10 Pool Road in Sandbanks or wherever it is you want to move. And then you'll find the full postcode will be returned, and then dial that full postcode, type that full postcode into Rightmove and then hit for sale. And that will bring you up probably nothing or very few houses, because it will be specific to a very small postcode area. And then choose the option half a mile around and include sold properties to give you a perspective on what's actually under offer as well. And if that doesn't happen, you can go from a quarter of a mile to half a mile to a mile and so on, expanding out the area of your reach. And then if you find that there are things starting to drop in that look more suitable, of course, you'll need to revisit and re-research those areas, probably drive down there, get a feel and a handle on whether you could see yourself living there, and indeed whether it's practical for you. So if you can't find what you want where you want, other areas, more money, or lower your sights. They're the three options. And the only three options you have, again, detaching yourself emotionally, look at it from a business perspective, and hopefully that will help you find the home that's right for you. Now, many people are talking about die with zeros. It's not financial advice, by the way, but a lot of people are talking about this new strategy of not wanting to have any money when they die, and there are various ways of doing that. And a lot of people are talking about equity release. That's not something I'm going to cover in any detail here. Speak to your independent financial advisor, because it's a massive decision, and you do lose your home at the end of equity release quite often, or certainly a proportion of it, to the lender, if not all of it. So it's something that must be considered in the context of advice from a professional. It's not something we cover here on the Property Buyer and Sellers podcast. Something else I want to come on to now is buy-to-let. Is it still worth it in 2024? Because a lot of people are asking this question, should I be a landlord in 2024, or should I just go with my traditional investments? Now, let's look at the pros and cons of being a landlord in 2024. The pros of being a landlord: good long-term investment. There are still reasons to suggest that property will take the strain of inflation away from you, because rents tend to rise with inflation or above it, meaning that eventually, if you manage to pay off your loan, then you will find that the income you receive will go up substantially over time. And certainly we've seen that with rents. Yes, mortgage rates have gone up, but rents have gone up massively as well. And that has deflected a lot of the problems of, for instance, pensioners who are on fixed incomes, and those that have buy-to-let investments are seeing those incomes rise in line and sometimes above inflation. So it's a good long-term investment and good protection against inflation. It's not a get-rich quick scheme, never has been. We've always said that the long term is the secret to financial gains when it comes to property. But also, we think here at the Property Buyer and Sellers podcast that if you're considering investments in the UK, then you should certainly have property in there as part of the mix. Not all of it. Of course, you should have some other things, perhaps consider some fixed rate savings, perhaps premium bonds. As I say, this is not meant to be financial advice, but we believe that property is up there and in there and should be something that you're considering right now. The high demand for rental properties is the other reason. Rental property demand is roughly 15 to 1 here in the UK, meaning that you can always select a high quality tenant. Now, a longer term security means that you'll always have an asset to pass on. A lot of people are buying via limited companies these days, and that is something that can work very well for a couple of reasons. Now you can't offset interest payments if you're an individual buying and investing in buy-to-let properties. You can offset those interest payments if you buy via a special purchase vehicle limited company. Again, you need some advice on that probably, but that's what we think is a great idea. You're also able then to transfer the shares of that limited company on, and by doing that, the IHT gains, capital gains tax, is much easier to avoid, not evade, but avoid legitimately. Then on from there, the cons of being a landlord. Why shouldn't you be a landlord? Well, rental reform is the big one, isn't it? Everybody's talking about it. Labour and its new plans for a renters' rights bill, which we don't know the full detail of yet, but we do know that they're committed to scrapping Section 21, the no-fault eviction, which we all know is never used for no reason or no fault. It's always used for those reasons that perhaps are hard to prove, such as antisocial behaviour and beyond. That said, there will still be grounds that you can evict upon. It may be slightly harder, and looking at court reform, it may be the case that the courts aren't reformed, and that is something that we were hoping for here at the Property Buyer and Sellers podcast. One of the big issues for landlords is the time it takes to evict a tenant already. And by putting further legislation in the way, it may be that it takes longer to evict a tenant, and that can be a problem for landlords. But there are insurance policies out there, and any good letting agent, a professional letting agent, should be advising you on rental protection and legal expenses, guarantee policies, and these are critical to the success of a good let. We always recommend to our landlords that they take out one of these policies, and we use a certain provider which we know are very good when it comes to claims. They will pay out, and generally speaking, these policies will pay out the rent in the event of default by the tenant and the costs of eviction, and in some cases up to 3 months afterwards, while the property is then refurbished and got back into a lettable condition. So rental guarantee insurance with legal protection is going to be essential going forward, and as long as you have that in place, then I think that may well negate much of the many of the fears, in fact. But is it worth being a landlord? Well, we think so here at the Property Buyer and Sellers podcast, and it's something that over time you can rely on as an asset that will provide an income and will provide security for your family. But it's not a rich, quick scheme. It's not a get rich quick scheme. We always say it's a get rich slowly scheme. It's something that over time, most landlords that I know don't regret, because they've seen their equity build and they've seen their income be reliable, even in the wake of the pandemic. Actually, when the pandemic first hit, everybody thought that the property market would dip dramatically and that tenants would stop paying their rent. But in fact, that wasn't our experience at all. The rents kept on coming in because tenants realized that still they needed a roof over their head, and they prioritized their rent payments. And it was awful for some, really tough. And there were situations where landlords allowed them to have a break. But the landlords were getting a break as well. I know people say, oh, the landlords got a holiday from their lenders, and that's often misunderstood. What happened was the lenders allowed them to not pay for a while, but then they put those interest payments onto the loan. So the landlords didn't actually win, if you will. It was at best neutral. But most tenants, they were very reliable during probably the hardest time, certainly the hardest time in my lifetime. We still found the rents were 95% coming through and without problem. So the reliability is there. And yes, we're going to see some changes with Labour, and that is going to shock some landlords for sure. And yes, there is still that element of society that feels that landlords are the devil incarnate, and that you are a rogue if you're a landlord. We hear that term all the time, rogue landlords, don't we? And we know here at the Property Buyer and Sellers Podcast that this is a tiny minority, and the vast majority of landlords out there want to provide safe and comfortable homes for their tenants, and they want to look after tenants as long as the tenants look after them. That's it for this week's edition. Hope you're well. We'll be back next week with another edition of the Property Buyer and Sellers Podcast. We hope you've enjoyed it. As always, like, share, and comment. We always like to hear from you as well. If you've got any questions that you'd like answered, then please do send an email to me, ken@jamesalexander.com, ken@jamesalexander.com. I'd love to hear your comments, questions, and we'll then perhaps even get you onto the show and certainly try and answer any difficult questions you have. Have a great week. We'll be back same time next week. Until then, look after yourselves, your family, and friends. Ciao.